We are living in unprecedented economic times. Over 10 million people have lost their job in a period of only a couple of weeks, and millions of homeowners are at risk of losing their homes. But fortunately, Congress passed the $2 trillion CARES Act, which, among other things, grants relief to homeowners. I'm going to be talking about that in this video. I'm going to show you how you can actually pay $0 on your mortgage for the next 12 months, and I'm going to give my full breakdown of that portion of the CARES Act in this video. Before we get started, let me know in the comments below if you've heard of this program and if you think it's a good or a bad idea, or if you have any questions at all. My name is Kevin Conway. I make personal finance videos like this one all the time, so if you like that sort of thing, be sure to check out my other videos. I recently did a video on unemployment benefits and how they've been expanded due to the CARES Act, and I also talked about the stimulus checks that are going to be coming soon. So be sure to check out those videos, and if you like this video, be sure to give it a like and share it with those who might find it helpful, and be sure to subscribe to the channel. Now let's get into it. So what is the big takeaway here? Well, if you have a federally backed mortgage, you can get what is called forbearance. So what is forbearance? Well, in this context, it allows homeowners to suspend their monthly mortgage payments, provided that they get sign-off from their lenders. Typically, forbearance is given in a context of a disaster or some other sort of hardship. And in this case, due to the global pandemic, the CARES Act provides that if you have a federally backed mortgage, your mortgage provider must provide you some form of forbearance. Now you may ask yourself, how do you know if you have a federally backed mortgage? You may have gotten your mortgage from Bank of America, Chase, Wells Fargo, Quicken, just any one of those mortgage providers. Well, chances are you do have a federally backed mortgage. It's kind of complicated, but suffice it to say, if you have a mortgage, it probably is federally backed. If you want to check it out and check to see if your mortgage is federally backed, look in the link in the description below, and you can actually search your mortgage and determine whether or not it is backed by Fannie Mae, Freddie Mac, or some other government agency. For context, about 3/4 of all mortgages out there are federally backed. So what does that mean? The CARES Act probably applies to you. So what does the law actually say? Well, if you've been affected directly or indirectly by the pandemic, you are entitled to forbearance from your lender. Now, the key thing there is the word indirectly. Now, indirectly can mean any sort of thing. Have you lost your job? Have you had your hours reduced? Have you been unable to actually generate as much money as you had in the past? Can you not get to work? Are you forced to stay home to watch your children because their school has closed? Given the fact that this has affected nearly everybody, chances are you would fit into that indirectly portion of the law. You will not be required to produce any additional documentation beyond your affirmation. Okay, so how much in the way of forbearance is your lender required to give you? Well, the law is clear. It states that your lender must give you 180 days of mortgage forbearance. That is, you don't have to pay your mortgage for 180 days, and if at the end of that 180 days you are still suffering directly or indirectly from the pandemic in some way, then you are entitled to an additional 180 days of no mortgage payments. So what does that mean? You could have 12 months of no mortgage payments. So what does this cost you? Well, it actually doesn't cost you anything at all. Mortgage providers are not allowed to charge additional fees or additional interest on your mortgage. But again, and I want to be clear, you are not going to be able to get away with never paying this mortgage payment. You're simply deferring it until later. You still will owe your principal and interest, but you're not going to be charged additional fees or interest. It is not like putting off a credit card bill, which just racks up month after month after month. This is not like that at all. It's actually very, very, very beneficial because you're not going to be forced to paying your mortgage now. You could pay it later when you have a little bit more in the way of financial flexibility. When you have, for example, your job back up and running, or you have those stimulus checks coming in, or you have unemployment benefits, whatever it may be, in the future, if you think you're going to be better off, it obviously makes sense to put off your mortgage payments until then. Additionally, to be clear, when you push off your mortgage payments, you're not going to be paying additional interest there. they only can charge you what you otherwise would have paid in interest on your mortgage payment. So if you have a flat rate, fixed rate mortgage and you're paying $1,000 a month, well, you're gonna be able to push off that $1,000 until a later date, and then you're still gonna be paying $1,000 on that payment. You're not gonna be paying anything more than that. So how do you actually pay the money back at the end of your forbearance period? Well, that's a good question, and it depends on what your lender agrees to. Your payback can come in one of three different ways. Either number one, a lump sum payment, which is what it sounds like. Number two, a payment plan, which is to be determined by you and your lender. Or number three, a total deferral, which is the best case scenario, and that's where you don't pay anything until the end of your loan, either when you sell the property or when you're done making all of your other mortgage payments. The lump sum is the worst of the three because you actually are going to be owing all of those mortgage payments at the end of your forbearance period. So you're going to be owing 6 or 12 months of your mortgage payments all in one lump sum at the end. That could be a lot of money. If your mortgage is $2,000 a month, that's going to be $24,000 in one lump sum that you have to pay your lender at the end of the time period. It might make sense for some people to do that, but by and large, if that's your only option, I would probably not use this mortgage forbearance. The next option is a little bit better, and that's a payment plan, and it can look something like this. For example, if you have a $1,000 mortgage and you're at the end of your forbearance period, your lender might say, give me $1,200 a month until you're all caught up for all of those payments that you didn't make in the past. This could be pretty decent and a good way to actually free up some of your cash flow now during the tough economic time and actually make it so that you can pay back your mortgage in a time period and in a manner that is actually going to be a little bit more digestible than a lump sum payment. And again, because you have no additional fees or interest, it can actually be economically beneficial to push off these mortgage payments until later in a payment plan. Number three is the best case option. And now that is the total deferral of your mortgage. Now this is great because it essentially is an interest-free loan because you aren't going to be charged any interest or fees in order to take advantage of this mortgage forbearance. Think of it like this. If you have a 30-year mortgage and you have forbearance for 12 months and you don't have to pay that portion of the loan back until the end of your loan, which is the total deferral, if you have a 30-year mortgage, that means you have 30 years, or really 29 years, to actually make that payment, which means because you're not charged any additional fees or interest, you're going to be getting that amount of money as an interest-free loan for 29 years. And because of inflation, you'd much rather pay a debt incurred in today's dollars with money in the future, all things even. If this is your option, I would absolutely take advantage of it. So how do you actually take advantage of this forbearance? Well, you need to get in contact with your lender before your mortgage payment is due. Don't wait until after, otherwise you will be delinquent. Call your mortgage provider or email them and get written confirmation of this change so that you have protection in the event of some sort of misunderstanding in the future. With that being said, keep in mind that lenders are absolutely slammed right now because so many people are requesting mortgage forbearance. So it may take you a while to get a response or to get something back, but just hold steady and realize that they eventually will get to you, but just be patient. A few more things about this mortgage forbearance program. It won't affect your credit negatively at all. The law is very, very clear in that regard. Additionally, remember that your mortgage payment typically includes your homeowner's insurance and your property taxes all wrapped into one. Now, your mortgage forbearance only includes your mortgage, not your property taxes or your homeowner's insurance. So remember, you still have to pay those on time unless your counties or whoever's providing you your homeowner's insurance requires you or allows you to do something differently. Additionally, you can actually request for forbearance to be less than 180 days or more than 180 days and less than 360. You can request any amount of time in that 360-day period to actually have mortgage forbearance. You don't need to have 180 days or 360 days. So what is the big takeaway here? Well, the federal government's newly passed law allows homeowners to not pay their mortgage for a period of time. They could defer it until much later. How that looks is going to be dependent on your lender and your situation in particular. For most people, it probably makes sense to take advantage of this program because there are no fees, no additional interest, and no hits to your credit at all. But just remember, it'll take some time to get written confirmation from your lender because they are slammed right now. And don't forget to share this video with those who it might help out. We are all in this together. It's a very tough economic time that we're all facing together, and we all could use a helping hand. So be sure to share it with somebody if you think they might benefit from it in some manner, or just tell them about this program, because the word needs to be spread. People need to know about this because there are ways that the government is trying to help us right now. And again, my name is Kevin Conway. I make personal finance videos like this one all the time. So if it helped you out, give it a like and subscribe to the channel. I'll see you next time. Thanks.